Hey traders, Jeff Yates here with Full Throttle Traders. Today I want to take a couple of minutes and break down how I scan for higher probability trades in the morning just prior to market open. We can use these for day trades, which I do, and also you can take them and use them for longer term trades because the concept's the same. Free of supply, potential for move, and that's really the edge in trading. So take just a second here. I'm going to move over. We'll take a look at that. All right, should be looking at my list here. So let's take one I took this morning here, ALB, to hit my list, and I moved over to my gap up list. What I'm looking for ideally is a price void area. Now a price void means that we're, just like it is, we're void of price to the left. The further back to the left, the better. The closer, the more immediate recent involvement people are getting in that stock, it's worse. You want to go back at least a couple months or more. Now this price void does two things for us. It tells us that it's gapping over the pivots off these tops, and it's giving an area where prices can go. That doesn't mean it'll go there. It just means that you inch up to 1 degree of probabilities when you are in price void. I've seen them move up into pure void and be the biggest red bar you've ever seen. But what we're looking for is the odds, right? So price void, how is that determined? Either through a consolidation of time, and then it drops down, let's say down here for a while, and then back up, and that creates this void like you're seeing in here. Supply comes off the market when there's either a price in time, price through time takes supply off, or a big drop. People get out, maybe 1% loss, a stop loss at some level, and that takes supply off. There's two ways to take supply off. So what we're looking for is stocks that are free of supply to the left, at least in the short term. So this morning, ALB was gapping in pre-market up a little bit higher. It actually opened a little bit lower, but it was into that void area, right? So the key is finding an entry once they have the area. So let's take a look at the stock list and how I would identify these. Now, I filter these on TC2000 by looking at least 25,000 shares in volume in pre-market. I want to look at the 60, or in my case, a 65-minute chart, because I can see a lot more granular inside this hourly chart that I'm unable to see on the daily, at least at the beginning. And I sort by change of percentages, right? So if I'm looking up here on ALB, obviously late in the day, this is after the day closed, ALB finished the highest percentage-wise of the list. And ironically, it was one of the higher ones in my gap list today. And so again, this is late in the day, so you're kind of looking at, but I want to show you the concept of price void. This actually would hit my list, so I'll put it over here. MSTR, same thing. Now MSTR has a price top here of around 420. It was gapping up right when this one was about gapping up about 50% into a red bar. Anytime I'm gapping up into a wide range red bar in this example, and that closes at the low, and that's important because you want as many people that are surprised that that's happening or covering those shorts to potentially help with the buying part of this trade, and that's exactly what had happened here. You can see they took this stock and took it straight up at that point. Now this wasn't a gap in the void, it was just a gap into where short covering might happen. So that was another one that hit my list this morning. Tesla obviously was just up because it ran right here in pre-market this morning, like straight up. And again, it didn't stay there initially, but I was on there for a different reason. ExxonMobil, once again, price void, buy setup in here, a retest here. I also want to see them over the 8 or far enough away from the 200 where I can trade into that area, or far enough below the 8 where I can trade in the area, but ideally above the 8. You see the price void on ExxonMobil. There's your double bottom, or what we would call a W bottom, and then the gap up. So that's why this is on the gap list. Now, did I trade this on the gap list? No, I got busy with some other stocks in here, and you can see right off the bat on July 2nd, 2025, the stock fell from its peak high of 110.50 to 108.85, almost $2. Now keep in mind, this is Wednesday. Oil numbers come out every Wednesday at 10:30, so that was a part of today. But once you see it going, it did start to go, and again, partly because of that price void. The same thing to the downside. I'm looking for a percentage of losers. I typically don't want to go over or under probably 7%. That's my max. Why? Because when I'm seeing stocks like this see here, it's decimated. And it may bounce, sometimes they do, but you have to believe that, look at the volume of this, 93 million shares, right? And this normally does about 11 million. So 10 times, 9 times the volume here. There's a whole lot of people coming out of that stock for your news or what have you, but I'm looking for somewhere no more than 7%. Another key component is what I call the ADR. The ADR stands for the average daily range right here. So I want to know, what is that stock normally go? Let's go back to the long list to kind of give you an example. Let's just take Oracle, for example. The ADR on Oracle is $6.86. Now, this is based on a 5-day. A default in your computer is probably set to 14, so your ADRs can be different. You can use that if you want. 5 is a lot more condensed. You can get kind of out of bounds in those 5s. But you can see this was gapping, actually ended up gapping down, but rallied here, was gapping up in pre-market here. But let's nonetheless take a look how far Oracle traveled today, about $16 here. It was basically 2 times the average trading range in here, a little bit more. But what's the average been? Oracle typically trades around $5 to $6, and that's about what it's showing here outside of today. They haven't calculated the new ADR until after the close of business today. It will go up a little bit probably. So you can see, I want to know, what's the muscle memory? How far does that stock usually go? So stocks repeat themselves for the most part up to the range. When you're gapping clear over into void with nothing to the left, like all-time highs, I look at that ATR as just one factor. I double that. In that case, it can run $14. It's kind of what Oracle did today, but it wasn't gapping over here in pre-market. So, but it kind of did that. I expect to see wider bars when they're gapping with nothing to the left. But outside of that, I'm looking for range. Why does that help me? Because if I'm sitting there and the stock runs up, it's $5.82 and it's going sideways late in the day, I don't want to try to, just using this as my benchmark, try to get $1.10 out of a stock that's $230. I won't have that much of a risk to reward in that. So you got to be careful how you actually consider that. A lot of times they'll blow right through it, sometimes it won't go as far, but I use that as a guide on a 5-day to help me determine, hey, am I too close to what the range, the top of the range is today? And if it's so, I'll move on. If it's got range, I'll hold off. Once again, you can see the percentages down in here. Now I'm sorting late day here, so obviously these gaps are going to be lifted higher, and of course the market went higher today for multiple days in a row, and so all these are higher. The lower stocks, these would be more relative weakness there, but these are the ones that look pretty weak, right? Now they're not gapping, they weren't gapping. This was gapping down INTC a little bit. CVS, healthcare was weak. I'm also looking at the ETFs over here. How's healthcare? Healthcare is the poorest sector of today. XLV, right along with financial secondary. Well, this was double topping here at the pivot line into supply, and a wide range bar ignited to the downside here at the bottom of that area. But when I gap underneath the green bar, ideally I don't want any tails to be up top, because when there are, you actually, a lot of the traders got out. But you want a shock value. Shock value means that those bars did not, they closed at the top. Every single person that was in that trade that day was underwater the next. What does that do? It propels the selling mode, which forces the short side to be a little more dramatic when you're thinking about in terms of what we call a pro gap. If you have a tail in here, they're not really pro gaps. But look how weak the stock was today, specifically, no earnings, but just in general, based on the market being exceptionally high today. Kind of wedged in here a little bit, lower highs than they had the breakdown here late day, down a couple of bucks. But those are some of the things that I do. I want to look at gaps up, gaps that are gapping down. I don't want to see more than 7%. I want to see at least 25,000. I want to see how they got there. Are they gapping from an extended move? When I'm looking at the hourly chart, I don't want to see 6 bars up and then a gap higher, because that's putting yourself into something. Think about if you were at the bottom of the first bar and then 6 hourly bars climbed, then it gapped up. Are you going to say, well, I think I'll wait for it to go 6 more bars? There's a chance you're going to be pairing some of that trade off. And if enough people subscribe to that, then a gap up after a move higher gets sold into, at least for the short term. Big money can turn that around, but we don't know if big money is going to be there. We just know that from a retail investor side, it's a good place to at least take some of your trade. So never take those up on the daily more than 3 to 5 bars higher and then a gap higher. You don't want to do that because there are going to be some profit taken in there. And then finally, no more than 7%. Look at the highs, look at the lows in the S&P 500. By clicking on that, watch the ADRs. I want at least $1.50 in the average move from a day trade perspective. At least $1.50. I can even sort this by ADR if I want to. And I could start down here at $1.50 and say I don't want anything above that. I don't want anything below it because I don't want to see Ford Motor Company that's gapping up and it runs 14 cents for the day. It's not going to be the stock that I'm going to be, having high hopes and making some money in. So keep that in mind. Build that gap list here. A lot of these end up being swing trades. If they don't, maybe click that morning, you can watch them for the rest of the day and maybe the next couple days for either new re-entries on the day trade or possible swing trades. So again, in summary, you want to find gaps that are gapping with no price to the left. You don't want supply. When you see that, when you see it happening, you've moved that 50% marker up from a win-lose to a 52%. And that's the edge you're looking for. You won't go from 50 to 90. You'll go from 50 to 52, and that's an edge. The slightest move up is an edge. Okay, then you wait for a pattern. You want to see if the market's going down. Is that stock holding? That's an edge. It's showing you that relative strength. Big money is trying to hold that stock. Then you look for patterns within there. I'll do one specifically on patterns at another time, but I thought I would start here with the gap list specifically to show you what I'm looking for. Again, use the daily and 65-minute chart to make sure that they're gapping. Also, and one final note, you want to make sure that you're gapping you're having at least 1 million shares or higher previous days. If it's 300,000 shares, move along because the spread opens up and it almost becomes a fly trap. You get in, spread opens up, they won't let you out, and then the thing tanks and you're waiting for a rebound and it never happens. So anyway, I hope this was helpful. Everything, a clear day starts with a well-prepared gap list, or at least ideal list, to kind of get you off and running that morning here. Once that first hour or two is gone, then you go back to the scan list and start digging in and see where things are at that point. But that list right there in time will make you money if you learn how to navigate that. Keep it small. Look for nothing more than 7%. ADR, average daily range, over 1.5 times, or if it's a $5, no more than 750, or no less than 750 on the run. I'm looking for bigger move potentials on those stocks. So what I meant by that is no less than $1.50 ADR. Doesn't matter if it's a $100 stock or a $1 stock. I want to see at least $1.50. Ideally, you'll have more as the beta changes in the stock a little higher into the higher price stocks as well. So I hope that helps. Again, come into Live Traders. Check us out sometime. We'll watch us do this live every morning, and it'll probably just resonate with you and build some structure in your day trading morning profile to get you started in the morning. Hope it helps. Enjoy the rest of your day.